All right, guys. I want to make a simple video on how to, analyze synthetic indices in a simple way. If you want to enter the market yourself, analyzing, and then you don't want to wait for signals or waiting for anybody to give you signals, and you don't also want to enter the market blindly. So let me just show you ways you can trade synthetic indices profitably without much complicated analysis. We all know, I don't know, many people knows about liquidity. I don't know if you have watched a lot of videos. You know about liquidity, you know about break of structure, you know about change of character. Some of these things are in smart money concept. So the simplest way that you can trade synthetic indices is find where there is liquidity. Also, trend line also works very, very well. Drawing your trend line to know the overall direction of the market. So as you can see here, this is the reef chart. You can see the URL chart.deriv.com/deriv. That is it. You also have a MT5. You can also do this analysis on MT5 depending on the one that works for you. Some people use MT5, some people use this particular deriv chart website to analyze the market. So I'm going to be showing you some things, how to enter the market, some of the things you need to watch out for. So here I'm going to be pointing out patterns you should always look out for when you want to enter the market, and I'm going to be also talking about entries, good entries. Now there are some people, the way they trade levels by level. They trade in I'm coming. There are some people they trade in horizontal levels. Do you understand? Levels, horizontal level, that's where they look out for. Do you understand? So they are going to be looking to sell at this place. Do you understand? Something like this. And there are some people, the way they trade, they draw trend line like this. They are going to draw trend line just like this. That is how they are going to trade. So they will draw trend line like this and then look for where to sell. Sure you understand? Then follow the trend. There are people like that. Now I'm going to be talking about the two. Now the goal of this video, you are going to be learning how you can analyze the market and find simple entry for yourself. Now if you want to enter the market, you need to be patient. You need to be patient. Find a premium zone to enter the market. What do I mean by premium zone? There is something called supply and demand. Supply and demand zone. Supply simply means where there is a sell pressure, and demand simply means where there is a buy pressure. So how do you spot your supply and demand zone? As we can see now, we are currently on if you check this, you see that this is R25, meaning V25. This is V25, and in the last 24 hours we can see that V25 is what? V25 is going up. So what we are going to be looking for is, we are going to be looking at this particular zone here. We look at this particular zone and see the reaction of what the market is going to do when it gets to that zone, because previously this is where the market gets to, because we have, before we have this massive downtrend. So this zone becomes a supply zone. Do you understand? So we are going to be looking for the market to get to that zone before it comes down. So we are going to be looking for a sell opportunity. Now how do you find a sell opportunity? No, first let me talk about pattern. There are some patterns you should always look out for when you want to enter the market, and the patterns are this W pattern, the M pattern. Do you understand? Now this W and M pattern can be use in another way. Now we have the W that broke a structure to the downside and the M that broke a structure to the downside, something like this. So how do you use this pattern? I'm going to be showing you some of this pattern on the chart. It is very, very important. Learning this particular pattern will make you a lot of money. This pattern that you are seeing here is going to make you a lot of money. So how do you use this pattern? Whenever you see a W pattern that broke a structure just like this, you are going to, it has broke this structure. This structure, breaking of this structure simply means that it's going to continue, that this particular one that you see now is just a temporary reversal. The trend is a downtrend, and then this structure that got broken here ensures that a sell confirmation. It is a confirmation that there is going to be a downtrend that is actually coming back to this particular zone. Do you understand? So this is what? A pattern that broke structure to the downside. So what you just need to do is look for a double top here and then sell it down. The same thing with the M pattern that broke a structure. You can see a structure was broken here. Do you understand? So this particular one simply means that there will be a continuation. So you just need to find a double bottom here. Do you understand? Market coming back. So the M broke a structure, come back and form a double bottom here, then it's going to continue. Do you understand? So I'm going to be showing you the M pattern and W pattern as well. This is the M pattern, this is the W pattern. So anytime you see M and W, what are you going to do? You look for where, you know, they form a double top, and then from that double top you do what? You sell to the downside. And this particular one, which is M, you find a double what? Double bottom, then you do what? You buy to the upside. So this pattern is very, very simple. Always look at this pattern from what? From the chart. Now I'm going to be showing you the W pattern first that broke the structure. This particular one I'm going to be showing you from the chart. Now let's clean this. Now the pattern we are looking for now is this is the pattern we are looking for. So you don't need any indicator, you don't need anything. Just look at this pattern, this particular pattern I am showing you. And how could you figure out the pattern from the chart? You can figure out the pattern here. You can see the pattern here. So what you are seeing here is what? You can see. That is it. That is it. So what this did is that you can see that the market formed what? A double top here. Then it started selling. Now this was a break of structure here. The same thing I was telling you here, that you find a pattern that broke what? W that broke a structure, then come and form a what? A double top here. Do you understand? And then you sell it down. So what happened here? You can see that that is the same thing that happens here. There was a double top here. This it broke a structure, and then the market did what? In 24 hours, a lot of money would have been made here, down to this place. Do you understand? A lot of money would have made here. So some of these patterns are patterns you are going to be using to make money. Study some of this pattern. Watch this video from the front to the back and then master some of this pattern. You can spot this pattern. The higher the time frame that you spot this pattern, the longer the trade will go. The higher time frame, the longer the trade will go. So spot this pattern and then trade the pattern. You are going to make a lot of money with that particular pattern. Another way people trade is drawing of trend line. When you have seen that, okay, maybe the market is moving at, let's say, the up direction, then you can draw your trend line like this. Then you are going to be looking at the the market respecting that trend line. So it means if the market broke out from the trend line, just wait for reversal. That simply means breakout and retest. So wait for it to retest, and then you can keep on selling and so on like that. So trend line. Now, example of a trend line is this particular trend that you are seeing here. This is a trend line. You can see it respected this trend, and then from here this trend was respected again. This trend was respected. So that is how the market works. So simple entry. Now, how do you find entry? Now, when you have spotted the M pattern that broke structure and the W pattern that broke structure, or the W and M, which I explain, when you have spotted that, then how do you enter the market? If you spot this particular pattern on a higher time frame, let's say you spotted it on the 4 hours time frame, then what do? You are going to come to the lowest time frame, let's say 15 minutes. Then you wait for 15 minutes to give you this same pattern or whatever pattern that the higher time frame gave you. It is a confirmation. Do you understand? That's your confirmation. Find that same pattern which the higher time frame has given you. Find it on a smaller time frame, let's say on 15 minutes time frame. 15 minutes time frame is a smaller time frame that is very, very good. You can use it to find a good entry for yourself. Find that same pattern on the 15 minutes time frame and then enter the market. So entering it on the 15 minutes time frame, you just need to put your stop loss at, your stop loss is going to be very, very tight. Very, very simple. It's not, once you've spotted that pattern on the 15 minutes time frame and you sell. What I'm trying to say is this: if you've seen the M that broke structure on a 4 hours time frame, and then you are looking for it to form what? A double bottom, so that you can start selling to the upside. You don't just wait for, or you don't just enter immediately like that. What you are going to do is, you are going to come to the smaller time frame, let's say on the 15 minutes time frame, and then you are going to find a trade opportunity that's going to give you this same pattern on 15 minutes time frame. So you are going to find something that has broken structure on a 15 minutes time frame, come to form what? A double bottom, and then boom, that is where you are going to find your perfect entry. So because you have spotted that particular option or trade opportunity on a 4 hours time frame, it will make the trade to go long, very, very long. You have spotted an entry on 15 minutes time frame, you enter immediately. And then how do you enter the trade? There is something called engulfing candle. Engulfing candle simply means that you can be having a sell like this, and suddenly you are going to have one green candle that only one green candle that cancelled maybe like 3-4 sales, previous sales. A sell happen, and all of a sudden, maybe, this is a 15 minutes time frame. This is 15 minutes time frame, 15 minutes time frame, and 15 minutes on 15 minutes candle. We have like 3 candles or 4 candles, which is different 15 minutes. 15 minutes, 15 minutes, 15 minutes, 15 minutes. And all of a sudden, you saw one candle that cancel all these 15 minutes. One green candle just form and, engulf all this particular candle. And then it decided to come back small. You see that big candle that you see, engulfing candle that cancel all these 15 minutes that you are seeing. It means that that particular trend wants to change. So when the market comes back, the market must surely form something like this. So you enter at this particular zone where the candle engulf the first sell that was coming, then you have something like this to the upside. So it's as simple as that. It's as simple as that. You are going to find trade like this. Now, how do you find candles that engulf? If you do what? If you go to if you go here, you are going to see candles like that here. Let me find candles like that. Let's go to a smaller time frame, like let us go to 4 hours time frame. So let us go to 4 hours time frame. On 4 hours time frame, you can see okay, you can see something here. On 4 hours time frame, you can see this particular candle here. You can see that after the uptrend, which is this, you can see that the market came back and come and tap this zone here, and then before it started going up. So even if you want to enter the market blindly, find a zone where the sell or buy is very, very strong. That is where you should enter. Where the sell, where you just see a sharp candles, long candle, that is a pressure, buying and selling pressure. So you can enter at that zone. Example of what I am trying to say is check this particular place here and check here. You can see that there is one green candle here that engulf the previous sell that happens, and then the market came back to form a double bottom. The market came back to form a double what? Double bottom here before it started going up. That's how the market works. So if you want to enter any buying opportunity or sell opportunity, open your eyes and enter where there is a high pressure, buying or selling pressure. It always respects that. The market always respects that. Do you understand? The market does what? It always respects that. So I'm going to be dropping more subsequent videos on how you can trade synthetic indices profitably. Watch this video and go and practice some of these things I just explained now and see how it's going to work for you. Thank you.